Welcome, everyone. We appreciate you all being here today, the second annual Phoenix Global Forum. I'm Greg Barr. I'm the editor-in-chief of the Phoenix Business Journal, and I have, as you know, this esteemed group of panelists today. I wish you all great success at the event this week. I hope you enjoy, and those of you from out of town, I hope you enjoy your stay in the Valley of the Sun. So we're going to get started right away. I'm going to start with Frank. You look at risk management a lot. We've seen so much happen in the past week. We're going to try and move well beyond the headlines about tariffs and the headlines about what the market is doing. Don't look at your phones right now, please. In terms of risk management, can you assess where we're at right now at this point in time in terms of what the future economy is going to look like when this is all over?
Yeah, very simple question to lead with. Thank you. Good morning, everyone. Normally, I'm the guy that tells my corporate clients that they need to watch out for risk, they need to slow down, they need to stop being so optimistic. Bad things can happen. And now I find myself in the unique position of telling my clients that they need to not panic, stop being so concerned, don't freeze everything. We're hearing a lot of words these days: disruption, decoupling. We're hearing words like uncertainty, volatility. And so when you put all of that together, obviously the markets have been gyrating very rapidly. And just like they can go down, as they have been, they can go up like they did earlier this morning. But for corporations and for other entities that have to produce, manufacture, provide services, they can't pivot that quickly. And so the first thing I would say to do is try and understand what's happening here and take a very careful look at historical patterns. This isn't sort of an exclusively unique time in the world. We're looking at major disruption in the economy, but the disruption is coming both in positive and negative aspects, right? The positive aspect is we're seeing an increase in productivity, unlike has occurred in the last decades due to technology such as generative AI. We're seeing enormous advances in quantum, which is something that is kind of a winner-takes-all game we can talk about later. We're seeing volatility because the two motors of global growth, which are China and the United States, are at odds in terms of how that should move forward. The Chinese, for the last decade, have been very clearly pursuing a strategy of isolating their economy from external dependencies and trying to make the rest of the world as dependent as possible on their exports and products. The United States has, and this isn't just now, this is previous administrations from both parties, has become alarmed at the trade disparities and at the dependence which COVID showed very clearly that the U.S. had on manufacturing from other places, and is trying to recover some of that back to the United States. So in that scenario, I think companies need to have a nuanced response. They need to be very careful, but they also need to take advantage of some of this disruption in order to grow.
The word deglobalization is one of those words that we're hearing right now. How do you all think this could play out? I mean, will it create different allies and trading partners? And of course, as you touched on, maybe we could look a little bit about how we all think the relationship between U.S. and China will change.
Greg, I'd love to answer that question. One of the things that we have been watching in Europe and Asia and North America took 70 years to build globalization. This took a long time post-World War II. And now we're being asked to rethink that globally. Vertically Asia, vertically Europe, vertically North America. And I think everybody needs to take a deep breath. This is sort of like a sandstorm going on outside. Do you really want to be walking out there, or do you want to take a pause and wait for that storm to just slow down a little bit? The factors of China are the ones that nerve-wracking us the most. Europe and Russia are least at this moment in time. But China, with a domination of critical minerals around the world, with the speed at which they industrialize, their navy is now bigger than the United States, their ability to manufacture is cost effective, and they are moving, just as Frank said, into AI at a speed that is unprecedented. We are watching a president and an administration currently make comments about reindustrializing the United States. This is a very broad topic that will take an enormous amount of time. One of the things that we're following very closely is this a moment in time to recalibrate trading because we are entering the equivalent of a new industrial age with technology, and America wants to go in balanced versus imbalanced prior to that. In the meantime, the pain and angst and confusion and chaos has caused an enormous amount of unknowns for people, and we're watching executives and companies try to figure out, do they act, do they react? And recently, we are now watching countries come back to the United States and say, we'd like to talk. And that is something that we are seeing in the markets right now. We're watching in the bond markets, we're watching it in the futures, and we're trying to understand where this is going to go. But the one answer that I have, Greg, is that from chaos does come opportunity.
For sure. And then from your point of view, Bill, of course, you're watching the markets very closely, and with your investor group of people that you're working with every day. Where do you see the historical perspective here?
Well, thanks for having me. And first thing I thought of, well, these two gentlemen were saying some very good things, was Charlie Munger was once asked about Amazon and Jeff Bezos. And he says, well, it's an act of nature. And what he meant by that is, hurricanes and tornadoes are acts of nature. And they're very powerful, and they're completely unpredictable. And we now have a president of the United States that's kind of an act of nature, right? He's unpredictable and like a tornado. So we're struggling with taking economics that makes sense and trying to apply them to a lot of this that doesn't make sense. Just as an example, there's a quick example. The money to invest in more oil and gas resources comes from the profitability of the companies that are in the business, or investors that would want to provide capital to those businesses. And we're basically cutting both of them off right now. So the chance of you ending up with more oil and gas from what's going on is diminished dramatically, which ultimately is going to cause dramatically higher prices in the long run. That is, if you can stay solvent until things get sane.
Well, did you want to add to that, Frank?
I was just going to say, I think I agree with that 100%, but I also think that when you look at what's happening right now in the world in general, there will be some clear longer-term trends that we can spot. So if you're a businessman or an investor, there are some pretty safe bets. It's a pretty safe bet that we will continue to invest heavily in the tech sector, particularly with regards to generative AI and quantum. It's pretty safe bet that strategic minerals, the production, the stranglehold China has on the prices, because they really don't have a stranglehold on the supply. There are critical minerals all over the world. We just haven't been able to produce them as cheaply as the Chinese, and we've ceded that market to them currently. So there will be a move that will not be temporary to try and produce those in other parts of the world to supply the U.S. market and other markets.
One caution I'd just give, I think you're right about the capital spending that will go into the technology. The history of investing in major technological advances is that the common stock success comes up front, the early time, and then the fruits of that come for decades after that. So the problem is, have we Have we done radio from 1926 to 1929, which was the technology advance of the right before the 29 crash? Have we done the semiconductor and landing on the moon? And have we done the .com is going to change our life? So I totally agree that AI is going to change our life. Be careful about what you might want to do investment-wise out of that, because have they front-run this the last 2 or 3 years?
Yeah.
And that's kind of a dangerous thing.
Well, I wouldn't focus on AI alone when I talk about technology either, because it's actually much more mature in terms of the investment curve, and you're already seeing massive productivity gains. The US is outstripping the EU in productivity, mostly because of the incorporation of those kinds of technologies. I'm talking about quantum, for example, which is much newer and much more of a game changer, whoever gets there first. The US and China, this is a military and technological, basically Cold War, and whoever gets there first is going to dominate those sectors and have a real leg up on the rest of the world.
Yeah, and that's what's really happening kind of behind the scenes with all the noise of the screaming back and forth over the tariffs, is this long-range outlook for military technology.
Absolutely.
If I can add to that, one of the things that we are watching as a byproduct of everything going on right now is America is testing its institutions much farther than people thought they could, whether it's judicial, congressional, whether it's a breakout of different cabinet members. This is one of the moments in time where that testing is going to basically tell us how far this is going to go. One of the other interesting byproducts of what this administration has done by putting tariffs on all these countries around the world is it has cost each of these countries now to look inwardly at themselves. And that hasn't happened in a long time, whether it's Germany or Canada or Spain or Mexico. This whole process, everybody for purpose of individuality, sovereignty, self-sufficiency, has looked inwardly at their countries and gone, you know, maybe we're not as strong as we thought. Maybe we need to clean that up a little bit more. In Canada, one of the things that's going on right now, very few people may know that there are tariffs between the provinces. That hasn't been looked at in years. So I think a lot of countries are glass houses, and they have to be very careful how they react to what's going on globally at this moment in time, and taking an inward look at what their problems are simultaneously as this process has exposed.
And don't you think, when this all shakes out, that we will see more different kinds of trading pacts emerge in different parts of the world, with people finding, Canada, for example, has talked about finding new partners to sell oil and gas. Obviously they sell a lot of oil and gas to the United States, but now they're saying, well, okay, with the situation here, maybe we'll look to add other partners. But then you see that and you take any kind of product and add that around the world. Will we ultimately end up with a much stronger global economy by the time this is all done?
It's so funny that you mention that I like to joke that the Canadians had better dinosaurs, because their wells last 25 years. The tar sands and the heavy crude, the wells last for 25 years. The United States, this idea of snapping your fingers and dramatically increasing oil production, the Permian Basin is more than likely peaking out right now. In fact, there's a TV show, and whenever there's a TV show, the creative types in Hollywood always are pretty close to the top in production. The Permian Basin will peak out, is probably peaking out as we speak, and 10 years from now will not be producing nearly as much oil. Well, why that's important is over the last 10 years, at the margin, they were the big addition to the supply. So it just, some of this just baffles my mind. You're going to try to squeeze blood out of a turnip when it comes to the Permian. Whereas the Canadians, they got dinosaurs that are going to last for a long time.
Well, and on top of that, you have Vaca Muerta in Argentina, which is even bigger potentially. You have what's going on in Guyana. The only example of a Chinese and American company joint venture extracting oil from the sea. So there are a lot of other alternatives, but I do think that what we're going to see is less of a globalized economy and more of a lot of bilateral and multilateral agreements that make a lot of sense in terms of what we're trying to, achieve along those lines. And I also, when you think about the corporate side of this, one of the mega trends is going to be a move towards resiliency versus efficiency. We spent decades trying to be hyper on time, fabricated at the last second with everything coming in all the world. It's like an orchestra. Companies are not going to be able to do that anymore. It's going to cost more, but they're going to be more resilient to shock. So is that better? Is it worse? It depends on how you look at the world.
And I truly believe you are not going to be able to undercut what is going on in Asia and Vietnam, South Korea, and China, and bring back to America pencils and shoes and garments. I think somebody is really not paying attention to that. But technology, absolutely. That is going to be the key to an awful lot of this. And to your point earlier about countries paying attention to each other, I'm a firm believer that these trading patterns are going to change, that we are watching something that is evolving before our eyes at a rapid speed. In North America, one of the secret weapons is Mexico. And Canada is a very mature market, and Canada and the United States will get back and forth and do different things. I'm not overly concerned. That will get worked out, give or take 3 or 4 things that consistently happen. UMCA will come back, or CUSMA, depending on where you're talking. That will come back.
Yeah, and this is really what we're hearing right now are kind of the opening salvos in what will happen when USMCA is renegotiated in 2026.
That's absolutely it. And again, Mexico is going to play a massive role in what is about to transpire in North America.
Well, Mexico would like to be the new China in some ways, in terms of manufacturing, and I think right now they're assembling Chinese products, but the goal would be to manufacture more of it, and I think that's a kind of a pivotal role. And when you talk about winners and losers here, Phoenix is a huge winner of all this. They just secured, one of the largest investments in U.S. history for nanoscale semiconductors, in part because of the push to move that out of Taiwan. So,
When I was in college, in summers, we worked at the Crown Zellerbach paper mill in the Twin City hometown in southern Washington. And there were 2,500 people working there. It was the largest paper mill in the United States of America with 16 machines. There's one machine left. It's hellaciously profitable. There's about 110 people work there now. And I think the Koch family makes about $100 million a year off that one machine. But the idea that you're going to bring back paper production to Camas, Washington, it's not going to happen. No. And therefore, this idea that we're going to suddenly have a massive renaissance and attempt to appeal to less educated, hardworking people, and employ them in manufacturing. They certainly can at Taiwan Semiconductor when they get done, but they can't in paper mills and other industries that you can do it far more effective someplace else.
And speaking of semiconductors, one of the things that we are going to see play out here, because Phoenix, it has become one of the epicenters of the semiconductor sector with TSMC and Intel and others that are looking to build here. Amcor is looking to build a $2 billion plant here as well. Another thing we're going to see in the shifting economies, though, is the fight for workers, the fight for skilled workers. There's, on paper, 20,000 new manufacturing jobs that are supposed to come to Arizona in the next 7-8 years. That's a lot of people moving from places. You can grow a lot at home. But I think, Glenn, you've talked a lot about the mobility of workers in the future, and with this huge demand for skilled workers, are there winners and losers there? How does this play out?
I think one of the byproducts of COVID was working at home. And I think activating remote workforces is going to be very, very important in the service and financial communities. I think the manual labor is no longer going to be the agriculture as this becomes more automated. It's going to be that middle between lower end and higher end, and this brand new middle. It's the people in the bunny suits at TSMC that are above average. Again, I get back to Mexico. Mexico is no longer the land where people preconceive a worker. That worker has gone up and up and up, and they have a grand position of working really hard and doing things. More concerning to me than labor is energy and water. That scares me more. Updating a 1970s energy grid in the United States is petrifying.
45% of electricity now is made with natural gas in the United States, which is kind of astounding. I grew up living on the Columbia River, and the dam system on the Columbia River is the largest single producer of electricity in the U.S. And now natural gas. And ironically, investors are chasing after utilities that are going to start up a nuclear reactor, and they're selling the companies that produce the natural gas. It's quite a bizarre set of circumstances. But you know what you were saying. Think of locally here in the Phoenix metropolitan area. Howard Hughes Corp. Bought the land out there to create a community of 300,000 people. What's it called, Terravias or something like that?
Terra Vallis.
Yeah, Terravallis, and we own shares of a company named Lennar that will build most of the homes there, and the stock has been getting beat up because the market's getting beat up, but that's going to be a bonanza. So back to the remote workers and where the workers are. Companies need to put their employees where there are homes for them. We joke in our work that U-Haul should buy Southwest Airlines' slogan, which is "You're now free to move about the country," because that's what needs to happen. The people need to gravitate from the expensive property areas to the less expensive property areas. It's been going on for years on the West Coast, and now it's happening in Columbus and Cincinnati and places like that. But so this is an example that some of those people that'll work at those expansions of the semiconductor industry here, and they'll buy some of those houses.
Sure.
Especially if they're Dodger fans, because it's close to the spring training facility.
I actually have a slightly different view on the human capital side of things from the corporate world. It already is a major issue for any corporation that has to hire skilled workers. So I have clients that have backlogs of 15, 20,000 engineers that they need and can't find. The automotive industry, when the U.S. cracked down on Mexican visas for workers that come in and work in semi-skilled positions on the automotive industry, it was a huge problem. It still is. It's not that electricity and water doesn't scare me. Those also concern me as well. And I have to say, on a global basis at least, the trend towards small and medium sized nuclear reactors is a very big reality. It's absorbing a ton of investment. The new technology there is very exciting. And if we keep doing AI, we're going to become like the Matrix and have to plug ourselves into batteries.
So what's going to happen to the price of those skilled workers?
I would assume it's going to go up.
It's going to go up. So the dock workers got an 8.5% compounded 6-year pay increase. The machinist at Boeing got 8.5% per year. And we're going to clobber the oil companies to try to get inflation down when you got to pay those skilled workers dramatically more to encourage people to get those degrees.
So it's a problem.
It's a problem. Inflation is there just doesn't seem there's any way that's not going to be a problem.
So let me throw another twist into that, and that is that we have universities producing liberal arts degrees and students going to work at Wendy's. So
no, come on.
okay,
Starbucks
McDonald's,
also.
maybe Starbucks. Where the trade schools in the United States have got to step in and augment what we have overly promoted degrees at universities for a missing element of the workforce to come in. And I can tell you, as someone who is a chairman of a company that's invested $3 billion in this state in water, we have also got a Canadian company. Canadian companies are so liquid right now with the pension plans, they are pouring money into areas that have debt problems. And a lot of cities don't have the tax base to bond, so therefore their infrastructures are getting left behind while the growth is occurring. And this is something that is in the Arizona market. We have another Canadian investment in New Mexico where a pension plan, the Canadian pension plan, put $9 billion into it, and they're building 970 wind turbines. This is called Pattern Energy, and it's going to bring 4,000 odd megawatts of power into Arizona in the next year. That is going to be a Band-Aid for a region. You can't build these infrastructures overnight. So if you take a look at a region like Arizona, and it's not uncommon around the world, where it took an enormous amount of time to create water supplies 70, 80 years that allow us to live here today. We unfortunately in the United States are so short-sighted that we are not taking the time to build infrastructure for not today or tomorrow, for 4-year political cycles, but who's doing it for 25 and 50 years down the road for not us, our generations next, and the generations after that. We have an obligation as North Americans and people in other countries around the world to stop thinking about tomorrow or next week or the following month. But we have got to start investing way further out so that these generations have got something that we've left them.
Well, we are seeing, besides the project in New Mexico, there is a huge number of, I'll call them battery farms, being built in other areas around Arizona and in New Mexico, separate from even from that project. So I don't think, in terms of shoring up the grid, we need, a larger investment in overall infrastructure. There's no doubt about it. But at least, you can see there are some steps being taken locally, and I think some of the providers here are already saying they see a little bit of wind behind their backs in that area right now.
But Greg, one of the things, I was with the head of Microsoft's energy program. He's building 50 nuclear reactors around the United States because of AI.
Yeah.
And that is a staggering draw on energy. And if the United States wants to maintain a position in that next generation of technology, it's going to have to do what you're talking about.
Yeah. And of course, we're seeing that with the requirement for crunching all that data, we're seeing, I can't remember the count off the top of my head. We have 7, 8, 9 large data center projects under construction right now within just a few miles of here. So that's another part of what's happening. And then, of course, all of that will need huge amounts of electricity to run those, too.
Yeah, a lot of that is currently under review as well, because one of the problems we have is law of diminishing returns. So we're adding we need a significantly higher amount of calculating capacity to get very small gains in terms of the intelligence of our AI. And so, I think there's going to be some new technologies coming out that try and do that without using such a massive amount of energy and computing space in order to achieve those gains, because it really
that model needs a bit of disruption. Speaking of what we do with disruption technology.
But again, thinking about thinking of this from an investment standpoint, shocked that I would think of it like that. The cycle where we have a kind of a joke in the business. You can't spend your way to prosperity in a business. So, think of a Warren Buffett example. He's owned Coca-Cola for 40 years. How much has the original Coke changed in that time period? So there was no technology that went into improving it. Now there's some better marketing efforts and some things involved. So the best and most profitable investments are companies that don't require most of what they make to be poured back into the business to make it continue to succeed.
Sure.
And we've just spent the last 3 or 4 years with the companies that have the most money being poured into them to succeed. And now we're entering, like you described, that spending phase. The capital spending phase in technology is very high right now, and again, you don't have a tendency to spend your way to success.
I'm going to get back to something that Glenn mentioned earlier. We're seeing, economic regionalization as well as something that's happening with, we're seeing it now. We'll see something come out of what's happening with different trade negotiations in different areas. But for example, on the Canada-U.S. border, you're seeing, immediate impacts of what's happening with the auto tariffs, with, issues with companies on both sides that are close to the border they've become interdependent on each other for the auto industry. What about the future of regionalization as it affects even, Arizona and Mexico? It's a huge neighbor to the south. Glenn, what do you see in terms of regionalization and synergy between us and Mexico coming up?
So on automotive, first and foremost, I wouldn't want to be Windsor, Ontario right now trying to make decisions, and Premier Ford. In regards to Mexico, all you have to do is take a look at what goes on in Querétaro with the aviation business. Its integration of its supply chain with Montreal and Quebec is massive, and I'm less concerned about where assembly occurs, but I am absolutely concerned about where parts are generated from in the three countries. And Mexico has rapidly, year over year over year, if you take a look at the supply chain for automotive industry in Mexico now usurps Canada. Mm-hmm. And that's why Canadians have even sat there and said, maybe we should go just work with Mexico instead of the United States. That doesn't work either. But the Mexican government has been very prudent in all of their states, and they have been very careful to systematically pick up that automotive and aviation supply chain brilliantly.
What you mentioned, I've got a kind of a micro example of what you're talking about. On late Friday afternoon, from late Friday afternoon to late Sunday afternoon, people come from Vancouver, BC down to what's called the Tulalip Premium Outlet. One of our companies, Simon Properties, owns that, and that's a brand, a nationwide brand. But the parking lot is absolutely, completely packed with British Columbia license plates for the entire weekend, right? And so how much is this all going to get disrupted from what's going on?
I would just say, when you look at Arizona as a whole and you think what government's role should be in a market economy, it's really to set the playing field, right? It's plant the grass, paint the lines, put the nets up, I think Arizona's done a really good job as a state in attracting business to itself and in setting itself apart from some of its bigger neighbors who may be less friendly towards business. I think it's in a very good position in terms of the proximity to Mexico for some of the things that were being discussed earlier. May not be the best place when you have an illegal immigration problem or border issues. There's a giant border conference going on next door with thousands of people at it. But, I think there are some real advantages here for Arizona when you talk about regional agreements. But I think we also need to be careful that the national sort of agreements that are going between the three countries don't degenerate into a bunch of mini, state with state across the borders, because that will really complexify the work for the private sector.
You don't want the provincial tariff situation.
It can be a real mess, because if your job is to set the playing field and then you have 6 different kinds of rules, we can have Canadian rules, football, and American rules, and soccer, we're going to be in trouble.
If I can add one more thing, when this administration looks at Canada and says, what can we pull back and pull down? You can't move fossil fuel from Alberta. You can't move potash from Saskatchewan. And you can't move power from Quebec. So the limits of what you can pull back out of Canada start to become different. And whether trade is large back and forth, the two things that are missed in general public reviews and by tariffs, services are not tariffed. And Canada, from a capital markets, if you look at the total amount of money invested in Canada by the United States and by Canada into Canada and the United States and the United States into Canada, Canada invests $400 billion more in the United States. But most people won't talk about that in Canada because it's mostly pension plan money, and they get a higher return. 38% of all the Canadian pension plans invest in the United States, and they only invest 13% in Canada. If their pensioners knew that, they would be upset, right up until the point that someone says we get a higher return on our investments in the States. And you cannot argue the fact that capital comes to the highest return. And therefore, the U.S. as a consumer nation and a growing market for anything that they can build and sell, other countries around the world are fascinated and pour capital into this country.
Money always goes where it gets treated the best.
I'd also point out that the capital markets in the U.S. are about twice the size of the U.S. GDP when you compare it to the rest of the world. We're very much overweight and outsized when it comes to capital markets.
And that's really a problem. I try to point out to people back in 2008 when we had the fallout from the housing debacle and the bad lending and the sliced and diced mortgage pools and everything. In late September, the market had fallen a lot of 08 and Buffett wrote an editorial in the New York Times, and he said, "Buy American I am." He said, "I had a bunch of personal money and I'm starting to apply it." Well, the market had fallen to about 28% below the GDP of the United States, and of course it was double at the high recently. And Americans in aggregate were far and away the most committed to their total financial assets in common stock at the beginning of this decline. So a lot of people are looking and saying, oh gee, what's wrong? What's wrong? No, actually, this is what's right. I mean, you have to correct excesses regularly. They get unhealthy, and so that's another challenge that the United States has got, is that we have a huge population of 60 to 80-year-olds. All you have to do is go out and walk around in Arizona to find us. I'm one of them. I live here, and we own most of those equities, and that's what builds houses in Paradise Valley, by the way. And so that's a temporary phenomena. It's got to come from these other industries that these gentlemen are talking about more than it is from the largesse. And that consumer confidence, if the 60 to 80-year-olds are spending money like crazy, the 35-year-olds are spending money anyway, because you have to when you're 35, whereas when you get older, you only do it because you want to.
If I can add a few more things on Canada and its investments in the United States. If we were truly a bad investment and there was truly something going wrong, why would all 5 Canadian banks be as large as they are in the United States? Why would Brookfield, a $1 trillion Toronto-based company, move to New York City? And to your point, money follows and goes where the opportunity is. And you have to separate the elbows up and the booing at hockey games and the 51st state and this highly emotional involvement that has occurred, not just with Canada, but other countries around the world, and take a look below that and see what we're talking about. And that is the real movement of money and opportunity and where it's landing, whether it's landing in Germany, whether it's landing in Spain. You know, when it comes to tariffs going around all over the world, people are going, why am I getting a tariff over here? Well, China doesn't just sell directly to the United States. China sells to South Korea, Vietnam, repackages it and sends it over here. So again, follow the money, follow the supply chains, and you'll start to see what's going on globally at a different rate than just Canada and Mexico, but other parts of the globe and how they are pouring different types of things into the United States that we need to be aware of.
We've all touched on various comments during the past part of the panel here that we've covered so far, and we mentioned AI a few times. Can we just look at AI for a second now in terms of the effect on the future economy? Everyone, at ground level, people are worried about it will cost jobs, or people think, well, it'll help knowledge workers enhance what they do. How do you see the effect of AI playing out, in terms of the future economy?
I think it's a great enabler. We talk about tech enablement all the time in the corporate sector. Most clients, for example, that are in the services industries or that are in the tech industries, other tech, not AI, are making calculations somewhere in the 1 to 4 range, so that one person can do the same amount of work that 4 people could do before. And that's just with what's available today, which is not that great, and needs a lot of help sort of being more efficient. We talked about that earlier. But when you look at this sort of ratio, you say, okay, well, that's 3 people who aren't going to have a job, but it's not really how it works. When you get more productive, generally that productivity generates more employment because you're growing the economy in a way that doesn't create inflation. So when we talk about ways to combat inflation, the best way to combat inflation, be more productive. Now, one of the problems you have with the at-home issue is that some of that productivity is being sucked up by individuals to walk their dogs rather than, the company, which could take advantage of it if they knew that they're, basically they got done with their work at noon and now they're off, playing video games or something. So it needs some refinement, but I think it's nothing short of revolutionary. And disruption does create unemployment and dislocation of workers and everything else, and it's going to exacerbate the skilled versus unskilled worker. But I do think overall it's a great enabler.
I think it is coming no matter whether you want it or you don't want it. The question is, do you embrace it or do you not? If you do not embrace it, there are 1 billion people behind you that will. All you have to do is go to other countries like China. I go to the Consumer Electronics Show every year, and I'll tell you, ladies and gentlemen, what I see coming out of Asia is quantum leaps ahead of Europe and North America. They get behind it. They are all in. And we have got to start paying attention to what is going on, or we will be left behind.
Okay, well, let's look at something that you're familiar with, Bill. There's a lot of dry powder sitting on the sidelines, a lot of uncertainty that's out there with investments. You mentioned, Frank, you mentioned earlier about small nuclear reactors as future power sources that you see a lot, money is heading in that direction. So let's look now at where do we think the money is going besides geographically in terms of investment in different sectors or different, advanced manufacturing is of course coming, that's one thing that we can say is increasing in the United States, that where investment is going there. Where do you see the main part of the economy changing in terms of what investment and what areas are going to be focused on in the future?
Well, ironically, Phoenix was kind of one of the places that was kind of the center of the housing debacle, just because it was in position to build a lot of houses back in 03 to 06. The home building in the United States, divided by population, would have been at the far low end by percentages of the period from, say, 1960 to 2000. The reason the homes are highly priced is because we're not building nearly enough of them. Okay, so I mean that's just one area that we just think is a great opportunity, and it kind of gets lost in the shuffle right now. In other words, supply and demand. If you create a lot more homes, you could moderate those prices, but yet we make it very difficult to do that, but the beauty of Phoenix is this is one place in the world that we don't have any problem doing that. You know what I mean? We'll convert the dirt. I was out at the ladies golf tournament at Wild Horse. We have a brand ambassador, Ingrid Lindblad from Sweden, and so I was out there walking with Ingrid with my family, and I looked around, and I mean, you could see dirt for miles. Now that's Indian reservation property, I think.
Yes,
but
it is.
Who knows? Maybe they want to get rich, because I could just vision. You could build a lot of houses in between there, say the south end of the metropolitan area and Costa Grande, for example. Sure. And so I just looked at that, and I thought, how many places around the world are in a situation like we're in here, where people want to come here? The metropolitan area functions so well. The freeway system is superior to almost every major city I go to in the United States, and we could just have a lot more people because we're interested in having a lot more people, and we've got the dirt and we've got the freeway system to handle it.
So I just came back from a conference at the Biltmore of pretty much every major alternative investor globally, KKR, PIMCO, all the names you'd know, Carlyle. And infrastructure was their biggest concern. Whether it's in the United States, Mexico's infrastructure is something that's another problem. If you go down to Sonora, their power infrastructure needs work, as does their water infrastructure. And should Sonora grow the way that we think it is going to be a market that will feed into the United States with many, many companies, that power grid has to be fixed up. And that means that American companies and Canadian companies need to go in with our partners in Mexico and help them solve their infrastructure so that they can help us solve other problems that are labor related, that are employment related, that are manufacturing related.
I just point out that there's probably never been a time in recent history where there's been more liquidity in the market that hasn't been deployed.
Right.
And capital also flows to where it's less regulated. So there have been a lot of back and forth as to how the big banks and even pension funds should handle all the capital they have. But if you look at the private equity market, which has just grown enormously over the last couple of decades versus, say, the publicly traded or the large capital we were talking about earlier, they've got a model now that's sophisticated enough that there's an entire ecosystem at all sizes. So you have founder, sort of small company, private equity focus. You've got to focus on the mid-size, focus on the bigger. And what that's doing is it's allowing a lot of capital to go into things that used to be quite inefficient in the U.S., whether it's dental practices or roofing companies or services industry. You have capital pouring into all of these different levels that they didn't used to have easy access to. The rest of the world has more trouble with that in terms of deploying that, which is another reason a lot of capital is coming into the U.S. And I'm very bullish on that. I think not only do we never even think about direct foreign investment. If you think about the U.S. when they talk about capital, all other countries talk about how much direct foreign investment they're getting. The U.S. never talks about it because there's so much of it that we take it for granted, which we shouldn't. But it's just across the board.
The great irony is people handle illiquid investments better than they do liquid investments, right? In other words, if you own something that you can sell at any time, your patience is a lot less. Whereas in the private equity markets, we always joke, people love being in the private equity markets because they don't price things every day, right?
Yeah,
every
5 years.
It's every 5 years, so it's out of sight and out of mind. I am unfortunately, the price of my and our company's common stock investments, you can find out every day. You can find out every minute of every trading day, whereas in the private equity world, now, here's the problem, and this might become a subject soon, is we for years, interest rates in the United States went down for 40 years, and they bottomed during COVID at about 0.25%. And of course, that made people attracted to take risk. The risk premium went down as the interest rate went down.
A huge change.
So that was a huge source of liquidity. And then we get in COVID, and two different presidential administrations just pour federal borrowing, $12 trillion of monetized debt into the system. So one set of liquidity stopped in 2022 when the Fed raised rates 500 basis points. But the other one was already there and kept going, and that's why things have kept going the last couple of years, despite that 500 basis points. But if anything happens to the second one, if Musk has his way, that's kind of a humorous way of looking at it. Then if you cut back significantly on federal government spending, where if the Fed's not going to provide the liquidity and the federal government's not providing the liquidity, who is going to provide the liquidity? And the answer is you pull it out of the stock market, and that's exactly what's been happening lately.
If I can also bring up, how many people know that we're about to, in 2025, have to refinance $9.7 trillion in U.S. loans? That's the largest ever done, and it is massive. So that means that the U.S. has borrowed everything on its credit card. The pension funds are even borrowed against, which most other countries don't do. So at some point, you have to slow down borrowing on your credit card, and you've got to start A, saving, B, spending, and this is the private equity liquidation opportunity. Right now, you are watching liquid cash floating around the world looking for places to land. And why? And to our point here, Arizona happens to be one of those places where a spotlight is on for this moment in time. Mining companies cannot compete with mining companies in Asia. So no matter how hard you want to try to be infrastructure related with minerals, there is no way that we can build mines fast enough in the United States or even in Canada. So this is something North America has to look at, much less build. We used to have 11 smelters between Arizona and Utah. We have 3. One is owned by a Mexican company that is barely movable. The second is owned by Freeport, and they have a nice one here, but we are having to ship all this copper by train, by boat, to a smelter in China, and God knows what that environmental footprint is all the way, but people will fight building a smelter in the United States because they're fearful of an environmental thing. The money is there to build it. The wherewithal to build it is there. The ability to make decisions and show leadership is one and two of the biggest problems that I see in the United States right now.
Well, gentlemen, I want to thank you all very much for this spirited discussion, and please, everyone, thank our panelists. As we wrap up, and thank you very much. Enjoy the conference.